All right, guys, let's do question 3, which is the cash flow statement. We have information relating to Gussie Motors Limited. Gussie Motors Limited is a South African listed company with authorized share capital of 5 million shares. They import and sell automotive spares for all types of vehicles. It says the statement of comprehensive income. The income statement for the year ended 28th February 2023 revealed that a net profit after tax of 1,548,000 was made. The company is taxed at a rate of 28% on profit. There, guys, they just giving it to me. So that will enable me to calculate my profit before tax or my tax. So if I want profit before tax, I will take that 1,548,000 multiplied by 100 and divided by 72, because profit after tax here is at 72%. So you just have to do that small table, which is profit before tax will be at 100. Then tax will be at 28%. Then you will have profit after tax, which will be at 72, right? So if I want profit before tax, I'll just multiply by 100, but because I've got the 72, because this 1,548 is the 72, then they gave me cost of sales for the year ended 28th of February 2022, which is the previous financial year. Interesting indeed. Why would they give me cost of sales for last year? Just wonder. Anyway, let me just continue. And this is the information that I've got here. And this is another information that I have. I'm asked to prepare my reconciliation between profit before taxation and cash generated from operations. So I highlighted important things there. And I needed to highlight the fact that here your net profit must be before tax. This is not retained income. In retained income, your profit must be after tax. Here, guys, that is your retained income. This is your reconciliation between profit before tax and cash generated from operation. Whatever comes here must be before tax. You will basically take the 1,528,000, which is the profit after tax, multiplied by 100 and divided by 72. It will give you profit before tax, which will be 2,150,000. Then, for my depreciation, I will look at tangible assets, and this is all I have with respect to tangible assets. So this is all I've got, okay, when it comes to tangible assets. Let me see if I have any other information. They tell me that the company sold equipment for at its book value, which is that 300,000. So I will take that 300,000 and put it under investing activities as proceeds from the sale of shares. And then they say the company purchased a vehicle for 600,000. So that 600,000, I'll also put it under investing activities in brackets because it's an outflow we purchased, and that's what we paid for those vehicles. Beside me putting them on the face of your cash flow statement, those two amounts can actually help me calculate my depreciation. So I've got balance at the beginning of the year, and then I've got additions at cost, I've got disposals at carrying value. So whatever comes here, this is like your note number 3. Basically, it's balance, carrying value at the beginning of the year. Under movements, you have additions at cost, disposal, and depreciation, but we're missing depreciation. But we have the balance at the end of the year, which is carrying value at the end of the year, which will be 965,840. For me to get that X, I will just use the reverse operation. So I'll take this, add that, subtract that, and that will give me my depreciation that I'll have to record in this mode. Okay, that depreciation I will have to add it back because it was already subtracted from the 2,150,000. I'm going to add it back. Why am I adding it back? Because it's a non-cash item. If you don't understand that, guys, please go under my podcast and check the cash flow statement and look from the lesson 1. It's right at the beginning, lesson 1 up to probably lesson 10. That's why I explained this thoroughly. Then we've got interest expense. I just want to see what I did with the cash flow statement, if I dealt with it a question or I just did it at the end. It looks like I did it at the end, but anyway, I'll look at it later on as well. So how do I calculate interest? Let me see what I'm giving here. They said interest on the loan is not capitalized on my word. So this is, they say we had an additional loan was taken out on the 1st of January. Interesting, but they're not saying anything about the repayments. I'll just go back and check my loan balances. So let's check loans from sister bank. Oh, come on. Now I don't have the closing balance. I only have the opening balance. So let's see. For how long did I have that opening balance? From 1 March 2022 up to when? It's March, April, May, June, July, August, September, October, November, December. So I had it for 10 months. So that means 1,008,000. I had it for 10 months. So if I was to calculate interest on that, I will just take that 1,008,000 multiplied by 11% and multiplied by 10 over 12. But thereafter, it was no longer 1,008,000. It was 1,008,000. And then I'm going to add the additional loan that was taken. This is happening on the 1st of January. How much was that additional loan? It is 792,000. So I'm going to add that 792,000. So whatever I get here will be the loan balance from the 1st of January. So I'm going to have that loan balance that I'm owing from the 1st of January. It'll be January, February for 2 months. So when I calculate the interest, it'll be 1,008,000 plus 792,000, which will give me 1.8. That 1.8, I'm only going to owe it for 2 months. That's why when I calculate the interest, I'll multiply by 11 and multiplied by 2 over 12. When you add the two, it will give me my total interest expense for the year, which is 125,400. That 125,400, I'm going to put it here as interest expense. I'm adding it back. The reason why I'm adding it back is because it will be shown separately as interest paid on the face of the cash flow statement itself. Now take your profit before tax and add it with adjustments for, and that will give you profit before changes in working capital. Now we're going to go to inventory. Let me see if they ask for workings for inventory here. No, they didn't. What about here? Yes, they did. But what am I given when it comes to inventory? Let me check my statement of financial position, and you will notice that for inventory here, I was not given the inventory from the beginning of the year. That presents a problem, but I was given inventory at the end of the year. Let me look under additional information if there's anything that can help me out, because I don't have inventory at the beginning of the year. Now, 3.3 says that period for which closing stock So this relates to closing stock on the 28th of February. So we expect it to last only the closing stock. They didn't say stock, they just said closing stock. Only. If they just said closing stock, we're gonna find the average. All right. But here we won't find the average because they said the period for which the closing stock, only the closing stock, is expected to last is 36.5 days. So this is stock holding period. Now for stock holding period, what is the formula for that? Normally it's average inventory divided by cost of sales, but for this one, it will be closing stock for last year divided by cost of sales for last year times 365, because it's not about how long it'll take us to sell closing stock. It's how long it'll take us to sell closing stock on the 28th of February 2022. So they were specific. So how long it'll take us to sell last year's closing stock, they were specific about it. Now, what do we have here? We don't have last year's closing stock, so I'm going to put it as X, but we do have last year's cost of sales. We had right at the beginning, which was 2 million rand, and the stock holding period, we do have it from the question. It was 36.5 times that by 365. Now, I'll end up having 365 is equals to 36.5 times 2,000 will give you 73 million. When you divide it by 365, it'll give you 200,000, which is last year's closing stock. So this year's closing stock was 178. So last year's closing stock was 200,000. It means that there was a decrease in trading stock, and a decrease in trading stock means we sold stock worth that. That 22,000 will be our cash inflow. So a reduction of stock means that we sold the stock. So it'll be decrease in inventory by that 22,000 rand. You show it without brackets because it was a cash inflow. All right, let's check the receivables now. And for receivables, let me see if they asked workings for that. Yes, they did. So for receivables, let's see if they organize it for us. So what am I going to take for receivables? I'm going to take debtors control. I'm going to take accrued income. And I will take sales income tax for both years because it was on the debit side. I mean, sales pay as you earn, sorry. Because it was on the debit side for both years, it means it was included in trade and other receivables. I will exclude sales income tax. Even for this year, I will exclude it. Even for last year, I will exclude it because that one will be shown separately on the face of your cash flow statement. Okay, am I missing anything here? No. So I'm going to take all those and just add them up, which is your debtors control, accrued income, and sales pay as you earn. Normally it's a liability. I don't know why it is in receivables. So I'm going to add all of those up, and this is what I look at. Compare the two totals. You will notice that receivables went down. If it goes down, it means that our debtors paid us. That's an inflow. A decrease in receivables is an inflow. It means whoever was owing us paid us. And the difference between the two amounts will be 23,100 without brackets because it's a cash inflow. Now payables, what are we going to take for payables? I'm going to take creditors control. I'm going to take income received in advance. I was going to take accrued expense only if it does not relate to interest or not. But fortunately here I don't have it. I do actually, and I even ticked it. I was supposed to take this one here. Okay. Accrued expense that relates to interest on loan is there, but I can't take it. I cannot take it because interest paid is shown separately. Okay, so for payables, I'll have creditors control years and income received in advance. Okay, then you can add SARS UIF if it's there. Okay, only if they told you that it's there. Nobody pays your earnings credit, which is payables, but here they gave it to us in a debit. It's fine. Let me not complain. So we do it as they want us to do it. So let's do the calculations quickly. Basically, for payables, this is what we will have. When you compare the two, you'll notice that our payables went up. It means we did not pay our current liabilities. If we did not pay our current liabilities, we saved money. So we bought things on credit that we didn't pay for. Therefore, we'll have the difference of 148.50 without brackets. Added up, it'll give you changes in working capital, and ultimately it'll give you cash from operation, which is just the sum of these two. So we add those two, it'll give you cash from operations. That 2,657,000, I'm going to record it in the face of our cash flow statement under operating activities. Okay. Now let's check for dividends paid. What information do we have for dividends paid? They said we bought back shares from the estate of the deceased shareholder at a loss of 35. That's fine. We're gonna get to it. No shares were sold, so there's no proceeds. This is falls under financing activities, by the way. Then they say on the 28th of February, dividends were per share amounted to 15 cents. Oops. What is it that we're missing? So end of this year, dividends per share amounted to that. Which is good because they said, what they say here? They said we bought back shares at a loss of 35,000. No shares were sold during the year, and dividends per share amounted to 15 cents per share. Normally, when you calculate dividends per share, what is the formula? Now, when it comes to dividends, we're missing a lot. We're missing last year's dividends. We're missing dividends for this year as well. We're not even given interim dividends for this year. And I can't even use retained income because I'm missing a lot of things. I know I have a loss, but I don't have, well, I do have net profits. Actually, I can also use that. But the easier option here is for me to calculate these dividends. For last year, I'll take 10% and multiply it by 2.1, and that'll give me last year's dividends, which will be 210. Okay, it'll be 210. Now, to calculate my total dividends for this year, the only thing they gave me is my dividends per share, which was 15 cents. So I will just write down the formula for calculating dividends per share, which normally will be dividends on ordinary shares divided by the number of shares issued and multiply that by 100 cents. Dividends per share was 15. Dividends on ordinary shares, we don't have interim, so we can't get it, so I'll put it as X. Number of shares issued as at the end of the year amounted to 2 million. So that was given to you as well in the statement of financial position. There it is over the 2 million. So there it is over there, which is the 2 million. Now, when you calculate it here, you end up having this times 100. I multiplied both sides by 2 million, then I got 30 million is equals to 100x. Then I divided both sides by 100. I got 300 as my total dividends for this, which is your interim plus final. So I will normally take my total dividends minus the final. The final was 240, and then you add it with last year's dividend, which was 210. That will give you dividends paid. However, you can use this formula over here, where last year's dividends, you are going to write them as minus, and this year's dividends, you will write them as minus as well. And then you're going to add the final for this year, which was 240. And you'll pretty much get the same value, which is 270,000. Okay. Otherwise, you could have just said 60,000 plus 210, which is this year's interim plus last year's final. We're going to get the same thing. The reason why that 270 is in brackets because it represents dividends paid. It represents dividends paid. When it comes to interest paid, I will use that information about our accrued interest, which is this one over here. Okay. So last year's interest, accrued interest of 18,000, I'm going to show it as minus, and this year's final, which is accrued interest, will only be paid next year, so I'll show it as a plus. So you will take interest for last year and put it as minus. Total interest from your statement of profit or loss, you'll put it as minus, and the final interest for this year, you'll put it as plus. This will give you dividends paid. For taxation, you also have to check where it was. Okay, for taxation, let's check. Last year, it was in trading other receivables. So we'll show it without brackets this year as we need to receive it. This year, it's showing in trading other payables. So that 30,000 will only be paid next year. So we're going to show it as a plus. And we don't have our interest for this year. So for us to calculate interest for this year, you will simply take this profit after tax, which was how much was profit after tax here? We calculated it. It's at the beginning. So you'll take that profit after tax, which is 1,548,000, and subtract that from profit before tax, of which we calculated here as well. And how much was it? It was 2,150,000. So the difference between the two will be our income tax for this year, of which we will show it as a minus under tax paid, and which is 602,000. Therefore, we'll end up having tax paid of 507,000. For investment, what did they say about investment? I think they said we reduced our investment at Steinhoff. So you'll just look at your financial assets, which is, it was 700,000. This year it is 500,000. So it went down. It means we got the money, which is a cash inflow, and that will be written as proceeds from investment of 200,000. Tangible assets purchased, it was 600,000. Proceeds from the sale of tangible asset was 300,000. I spoke about this one earlier on. And when it comes to the buyback of shares, you just have to look at the difference between your ordinary share capital. So ordinary share capital went down, and they said we didn't sell any shares. So the only reason why it could have went down is because we sold shares. We bought back shares. I'm sorry. So you're gonna take this, subtract the 1.2. It'll give you 165. So remember, when we record the buyback of shares in our ordinary share capital, we record them at average price. But here we actually bought them back at a loss. That means we bought them back for more than the average price. It was 35,000 more than the average price. We are interested on the buyback price when we prepare the cash flow statement. So to get the buyback price, I will simply take APPS plus the loss. That will give me the average price. You will put it in brackets because it was a cash outflow, right? When it comes to the loan, let me see if we took a loan or not. Did it say anything about loans here? They said we took an additional loan, which was 792,000, okay? And they said interest is not capitalized. So since we took an additional loan, that will be proceeds from long-term loans. So we'll show it without brackets, right? And then we're going to look at balance cash and cash equivalents. And from what I saw here, for cash and cash equivalents, We only have bank overdraft this year, which is 550,000. So for this year, I will simply take that and add it with my cash flow and any petty cash, see any petty cash. For last year, I will simply add this too. So for last year, it was 707,000. For this year, it'll be negative. So you're gonna take this 550,000 minus 6,000, right? And when you calculate your balances for cash and cash equivalent, at the beginning of the year, as I said, it will be 707,000. At the end of the year, it will be 550,000, which is negative plus 6,000. And your cash and cash equivalent from that will be 544,000. And that is it from me for today. Okay, I think I've done a lot of the time now. I'm just going to give you answers to manufacturing. I'll give you the question. And the question already have it posted it, and look at the description, and that's what it is. And now this is what I will have as a question. It's pretty much straightforward. Just look at it. I remember doing this in one of the questions, so you can check manufacturing questions for this. Okay. I didn't type it, but now it's too late for me to type it. And this will be the name of it. All right, guys, that will be it for me. I will be your mail tomorrow's exam. All right. Make me proud. Koto.